Hey, Bulls and Bears, back with another dose. Thank you for joining me. It is September 17th, 2024. We got a lot to talk about. The interest rate cut, which is pretty much baked into the cake, is less than 24 hours from myself recording this. On a Tuesday, again, September 17th. Got a lot of news to get caught up on. First of all, though, what's your prediction for the rate cut? No rate cut? I don't think anyone's thinking that. I've told you here for over a year. Probably before the end of the year, there's going to be rate cuts. Here we are. Is it going to be 25 basis points? Is it going to be 50 basis points? Please let me know your prediction down below. I personally think it's just going to be 25 basis points for the following reason. I think a half a basis point rate cut, a half a percent or 50 basis points, I think that was going to be too alarming for the markets, because why would you need such a big rate cut when we've heard for the past 2 years that everything is fine, the consumer's strong? If the consumer's strong and if everything's fine, the debt is sustainable, is what we're also being told. It's sustainable. Deficits don't matter. Debt doesn't matter. You can create infinite amounts of money. Therefore, you can borrow infinite amounts of money because there's no gold backing the dollar anymore. Then what does it matter, right? We're told everything was fine. So why do we need rate cuts, folks? The debt is unsustainable. Of course, the national debt, we know that $1 trillion a year now, just in the interest on the debt. In fact, our debt payments exceed our defense budget. How insane is that to even think about? The debt payments now exceed our defense budget. Let that sink in, folks, all right? So let's get into some other news here. We got a lot to talk about here. The U.S. faces negative equity time bomb. Percentage of mortgages considered seriously underwater rises, and here are the states that are worse affected here. So let's bring this up here. Of course, the housing market, real estate, we know that it's being propped up, and even more so now. In fact, home prices went up in the last reading. We're going to talk about that here in a few minutes. And I was the only channel here, I believe, the only channel that I know of ever since 2020, when multiple people had predicted a crash. I said, well, no, they want you to own nothing. So why would they let it crash? Right? So it's going to be the government coming in, buying the mortgages. It's going to be big money investors coming in, buying lots of real estate. It's about 1 in 6 homes nationwide, right? It's going to be easy money, down payment assistance programs in every state. All right, so the rest is history, but let's take a look at this chart here. The most homes underwater, the biggest percentage of homes underwater. We've got Wyoming, and this is kind of surprising, right? A lot of people thought it would be Texas and Florida that had the big run-ups, but it has to do a lot with the job market there. Wyoming, 8.8%, mortgages seriously underwater. Oklahoma, 6.1%. Mississippi, 7.1%. Kentucky, 8.3%. And moreover, on this housing market, most of you know how I feel about it. I don't think they're going to let this market come down. I think it could be 2020 all over again when the next crisis hits, when the next economic situation comes up, bank failures, what have you. When that comes up, I don't think they're going to let the markets drop. I think they're going to freeze foreclosures just like in 2020, right? So the people deciding to do these things to keep the markets propped up, they're pretending that this is helpful, right? And on the surface, yes, it seems helpful. People are not losing their homes. The 7 million people that use the foreclosure prevention program in 2020, imagine if that wouldn't have been implemented. Would it have been 7 million people losing their homes? Many people argue yes. Why would those people have needed the assistance program if they were able to make their mortgage payment? Now, of course, there's some people that could have just been taking advantage. Maybe they had the means to pay the mortgage, and maybe they still did the forgiveness program just to have extra money put away. But 7 million people, that would have been much worse than the 2008 housing bubble that went bust. Right? That would have been more foreclosures in a smaller amount of time, all at once, because of the shutdown and the drastic measures that were taken against the health crisis. So folks, this could be propped up all the way to hyperinflation. I've said that here 1,000 times. Something has to structurally change with the system of money. Now, we keep an eye on the BRICS nations. They say that they're going to go to a more sound currency. It's not completely gold backed. They're not even talking about going completely gold backed. They're talking about a basket of currencies and commodities integrated within the trading of these countries, of these BRICS nations. Whole new payment system actually being rolled out, and we're going to see what happens in October with that. Starting October 1st, we're going to see what happens with the banks. Right? If banks are required to keep the capital that they're talking about, it's been reduced now to around 4.5%. But that's up from 0%, meaning banks could loan out infinite amounts of money, literally, ever since 2020. We're going to see how that plays out here. Will it even be implemented, or will they just change it just like everything else? Just like the FDIC limit used to be 250,000, that turned into billions of dollars with all the billionaires that were basically bailed out with the bank failures of 2023. You see what I mean? So just because something's a regulation or a law doesn't mean they can't change it in a time of quote unquote crisis, right? So got to prepare for the worst, folks. And I think inflation is the bigger risk here than deflation. And people often think, sometimes I see comments down on this channel, oh, this guy's been predicting a crash for years. No, folks, I haven't been predicting a crash at all. I've been predicting higher prices, and it's a crash of your purchasing power. So if you want to use the word crash, there you go. It's a crash of your dollar's purchasing power. How far will your dollar go? Well, it's getting less and less, even though they're telling us that we're out of the woods. Inflation has slowed on the way towards the target of 2%, which is meaningless when prices are still too high, right? Prices still going up. Anyways, let's move on here to some other news here. All right, writings on the wall, folks, here. Study finds American breaking point. 41% say they're at peak stress right now, folks. A lot of this, I'd say the big majority of this is financial. Of course, there's some political stress out there now. People are worried about who's going to win in November. Folks, I've told you my opinion on that. That's a big nothing burger. Yes, there's some wedge issues that they're going to divide everybody on. Of course, stuff like the migrants, the drawing blanks right now. Birthrights. What's the proper term to use for birthrights? Things that are big deals to a lot of people, but structurally, financially, not much is going to change. Both people, no matter who wins, either one of them is going to want rock bottom interest rates, right? To keep the debt bubble going, to keep the illusion of economic growth going, right? So I don't care who wins. I don't care who wins. We need somebody in there that's going to make major structural changes, a sound currency. Of course, that would bring everything crashing down if we went back to a sound currency, because banks could no longer loan out money because the banks, they don't have sound currency. They have zero. They have digits on a screen, completely fiat money being loaned out here. All right, a few other things here. Let's talk about what Amazon's doing. One of the world's largest companies, of course. Employees are upset, irate, in fact, is what the headline says here. The CEO announces mandatory return to office. And this is something that's been happening, especially since 2020 with the work at home trend, with the health scare and all that. My question is, all these CEOs that say they're for the climate, they say they're for, less pollution, green solutions, all this stuff. The greenest thing you can do is have employees work at home and not commute back and forth to work every day. That's very, very green, very good for the economy. So why don't they want that to happen? Not just the economy, but, well, you could say the economy, because they're not spending all this money on gas. They'll have more money to spend elsewhere, but also for the environment, right? If they're really trying to help the environment, why are the CEOs of some of the world's biggest companies doing this? Amazon is forcing its corporate employees to return to the office 5 days a week. Of course, the warehouse workers, they could have never worked from home anyway because it's a warehouse. But these people, these corporate employees, are not happy about it. Staffers took to Slack to air their grievance after CEO made a note on Monday. Employees have to return to full in-office work by January. Here's the thing. A lot of these people relocated. This has been going on since 2020. Relocated because they figured that they could work from home forever. Bad move, folks. Don't ever think anything is forever. Just like all the monetary policies, things change just like that. And now these people are going to have to move back to the office. What if the home prices near the office where they have to work, what if the home prices are a lot higher than they were? And they are in most cases, in most areas. So these people may not be able to afford a home now, and they may have to look for a different job. Is this a stealth way to get people to quit? That's what a lot of companies, I think, have done. They say if you don't want to relocate to come back to the office, then bye-bye. See, you wouldn't want to be you. That could be a stealth way of laying people off, and maybe they can even get out of paying unemployment benefits, right? I'm always questioning when we see big companies do these things. I always think there's a motive behind it. Call me cynical. All right, let's move on here, folks. What's happening at Starbucks? Starbucks CEO resigns. They've been having some problems. Starbucks North America CEO retiring after only 8 months. After only 8 months, that's pretty weird. Big company like Starbucks, supposedly, doing great. Operational issues have plagued Starbucks North American stores. Increasingly complex drink orders, rising prices, fluctuating foot traffic have strained staff and affected profits. The company also faced public criticism from former CEO and pressure from public boycotts. The drink orders, all the complex drink orders, what they talked about there. I wouldn't want to work at Starbucks. To me, it seems like the customers are way too picky about these drinks. And I say that with most food service industry, servers, even people working at fast food. It's a very difficult job. I think frontline jobs, like customer facing jobs like that, including fast food, are some of the harder jobs. I've been both in management, basically run my own company, and then I've also been on the front line. And I think the front line is the hardest of any job, right? And I think those people need to be paid more. And I think, of course, the CEO needs to be paid less. Of course, that's not going to happen. I'm going to switch it up here a little bit. So still, though, on the topic of don't just trust anybody, even the people that you think you should trust, right? Take a look at this. Probably not a shocker to a lot of people. Right on Church, that's Michigan. Pastor arrested after camera found in bathroom, folks. A pastor. Right? That just shows you that what you see isn't always what you get. Don't trust anybody. Don't trust the central bankers. Don't trust the big banks. Don't trust anybody. Don't even trust me, right? When I say something, go look it up for yourself. Do your own research, because I might be wrong. I might have an agenda. I don't. I just want to bring you the news, but I'm saying I'm human. I could. I just want you to be, I want you to question, everything that you see and hear out there. Look at this here. Here's an indicator of what's going on, how people are struggling. Frustrated millennials across the U.S. struggle to afford homes. Quote, it's just not a level playing field. So you see these people that bought their home back in the 90s. Now it's worth 10 times, sometimes even more than that, what they paid. So they take the equity from that home, they go buy another home, they go buy another home. It really helps them on the property ladder, but it's very difficult now to even get on the property ladder for new graduates, for a lot of millennials, because what you're paying for homes now, it's hard to rent it out for what the mortgage payment is. Of course, if you have cash, that's a whole different story. But if you're just looking to buy a home that's going to have rent meet what the mortgage is, meaning you can move out, rent it out to somebody, and what they're going to pay in rent is going to cover your mortgage. It's very difficult, especially here in California. So it's hard for people not just to get their first home, but to get on that property ladder where you start accumulating properties and start investing and adding more property. So very difficult across the board, folks. And now we've got rate cuts. Guess what? They're going to make things worse. Right? I think inflation is going to get worse. I think we're going to see even the fake inflation number that we're being fed, that they said the last one was 2.5%. I think that one, it's going to start ticking upwards. And from my research, you add about 8% onto the official inflation number, and that's what you're actually getting. I think we're a little over 10% right now. Please let me know if you agree with that. That seems to be the case, but yet they can't put out the real numbers. Otherwise, they couldn't justify a rate cut. You see how this works, folks. You see what's happening here. So please let me know what you think about all this. The rate cut coming up tomorrow, 25 basis points, 50 basis points. Doesn't matter. Is it such a small difference we shouldn't even be talking about it? Or is it going to cause panic with the 50 base point rate cut? All right, you let me know, people. We'll see you very soon. We'll talk about the rate cut after it happens on Wednesday. Come back right here and make sure you're subscribed. And we'll see you very soon. Keep stacking. Bye for now. Peace.